Buy, sell or rent your property with Century 21 and you could win a brand new 2-bedroom apartment on the Sunshine Coast in Queensland. Visit c21win.com.au for your chance to win.
Welcome back to Your Property Empire. Now, there's been a lot of current media coverage about flat or negative property growth over the coming years. In this segment, we look at the historic growth figures and see what growth outlook long-term property investors should be targeting. Well, joining me on the panel tonight is Rob Southwell from Pitcher Partners, accountants and advisors, and we've just been joined by Charles Tarbey, chairman and owner of Century 21 Australasia. So there's been a lot of kind of people talking about, I guess, mixed messages and potentially not a lot of growth. What are your main thoughts around that?
Well, I'm hoping that's the case. Now, it's really sad, isn't it? Last week you accused me of overstating the market. Now I'm going to go the other way and understate it for you. I think that the growth, as you and I both know, has been pushed a little bit more than it should have been pushed, beyond with those drops in interest rates that nobody was expecting going back last year. Had that bit of a spurt. And again, the greatest concern we both had on this is that people use that money to borrow more instead of using those savings to reduce their mortgages. So I think that apart from the fact that there's still talk of another interest rate reduction, which could put us at probably the worst possible point, because there's nowhere to move much after that. Now, I think that the prices are stabilising, and they have been right across most parts of the country, but the supply and demand issue has forced some areas to still demonstrate high clearance rates, which you wouldn't have expected this time of the year.
Now, Rob, when it comes to the numbers, the devil's always in the details. So
yeah, sure.
Australia isn't just one property market. Do we need to delve into these forecasts, pull out the numbers and interpret different things from them?
Oh, absolutely. I mean, you look around the capital cities, they're all doing, I think you look at the numbers in the last quarter, there's a number of capital cities that have actually fallen, whereas, Sydney and Melbourne continue to rise, and then you have to look within those markets themselves and seeing that there's markets within markets. So I think you need to be very particular in doing your research about understanding where you're investing, why you're investing, and understanding the market relative to that as well. It's very easy to get a throwaway line on the news about having this, global or national view of the property market, when in fact there's very very.
So what do you actually look at when you're looking at the growth forecasts?
I tend to use historical rates, particularly long-term averages, and then when, I've always looked at, when I'm going to buy a property, I always have a long-term approach, and it's typically, 4 to 5%. For example, I remember buying before GFC, I bought quite a significant property and targeted 5%, and I took a 20% margin of error and targeted 4%, and I exceeded that even through a GFC. So, and you look at the long-term averages, trying to target somewhere around that 5 to 6%, I think is realistic. Again, you can't always get that. One year you might get 10 or 12, and next year it might be flat or negative, but you want to look at over the long term.
Haven't we found that out?
I mean, you've been in the property market, what, 4 or 5 decades or something? You see the numbers come and go?
44 years.
44 years, not bad.
Thank you. Not bad.
But, I mean, you obviously see the scaremongering and the forecasts go up and down. What do you personally look at? Because you're an investor and so are your kids.
I am. Look, generally most people are scared off by people who are writing books about market changes. They come in, they've got a different attitude, and they fly in. They always seem to fly in at certain times.
You mean when they're launching a seminar or launching a book? Yeah, funny that.
And of recent times that they've missed the mark. They've come in because the market looks like it's going to change. They've missed the mark every time, excepting for the fact in mining areas, those various people would have picked that anyway, and people were talking about that anyway. So I think that over a period of time, as you said, it needs to be long-term investment. If you go back to the first home you bought or the first home I bought, it's a joke when you think of the prices we paid then. But realistically, our circumstances at that time were similar to people's circumstances today when they're buying their first property. You've got to buy in, you've got to hang in. Most people just don't wait long enough, Chris.
So when you're advising clients and they come up and say, oh, I mean, we always talk about property doubling every 7 or 10 years, again, depending on what it is, what are you generally saying to those clients of maybe what should they be targeting?
Again, it's you can't predict the future, but historical rates are probably the best you can go by. And again, it's about asking the client what they think they can get. I actually spend most of my time telling clients not to buy that holiday house because it's cheaper on Airbnb nowadays. But
holiday house and investment in the same sentence is
they
it's
don't
not really
mix.
worth it.
It's about being very clear about what you're trying to do.
We used to always say when interest rates start to come down, you better buy, prices are going to go up, right? This is when the interest rates were 9, 10, 11, 12%.
Yeah.
I mean, where are we going to go now?
Yeah.
I mean, you can't go much lower now, and I think that's going to really put a cap on it at some point in time, which we thought it had already done, but then the rates dropped that little bit more.
Now, you managed to find some CoreLogic data that we'll put up on the screen, but it's talking about annual change in dwelling values over the past 10 years and then also looking at the current dwelling values.
Yeah. So when you look at those, I mean, again, the first side of the graph shows the various capital cities, and across Australia over the last 10 years, even through a GFC, we're looking at 5.5%. But that varies from Hobart at 1.4% through to places like Sydney and Melbourne at over 6%. But again, if you time it right, you can do exceedingly well. Looking at the right side of the graph, where you've got the last 4 years' growth, again, is really probably supplemented a lot of that. But again, I was looking at these types of numbers 6 and 7 years ago, and it was showing a similar sort of rolling 10-year average of those. So I think it's important not to get carried away about trying to chase 10, 15% year on year, because it's very unachievable.
There is some crazy movement still out there.
Yeah.
I have stratas in each capital city where I put my headquarters, and I sold one of those stratas because I wasn't using the floor, and I thought I got what it was record price 6 months ago. I've had another offer on the floor I'm in right now, exactly the same size, for another 10% more, and that's a significant amount on these floors.
Sure.
And I've got not one, but half a dozen people trying to chase it. So in the space of 6 or 7 months, it's gone crazy still, in certain arenas and certain styles of markets. And it's not my shout. I'm not selling them.
But one of the things with that, Chris, too, is the clients, the amount of clients that say, I'm going to sit and wait. And, when the train comes by going that way very quickly, it takes a long for it to stop, turn around and come back to you. So...
Well, let's jump into your auction clearance rates.
Yeah, they've been pretty good again, Chris. The clearance rates across the country were 71.6% on a national basis. This time last year they were 77%, so still lower. Sydney wasn't the winner this time round. So Sydney came in at 76.2, but Melbourne came in at 77.3. So great clearance rates for Melbourne. And again, if we take out parts of capital cities that are not performing, because each capital city, as we've mentioned, has different marketplaces, you find the clearance rates, again, I'm pretty sure in Melbourne would be in the 80s, mid to high 80s, and so would have Sydney. So it's still a very healthy marketplace out there in those capital cities. Other capital cities, Canberra dropped, but after the election, the clearance rates dropped a reasonable amount from last week to this week.
And obviously, with the election out of the way, homes advertised for sale.
Still not yet. The New Zealand market is always slightly different than the Australian market. All the way along that we've been tracking this, we had a decline again for 4 or 5 weeks in a row now, down 0.26% for stock on the market from this time last week. But New Zealand had an 8.8% increase. And although Wellington and Auckland didn't get much, their markets are still weak. Waikato and Bay of Plenty actually had a good jump in stock. So their spring market's starting a little bit earlier than ours, and the weather certainly indicates that spring has already almost started when you look out there.
Perfect. And rent price movements?
Yeah, they're not too bad. Again, since the start of the year, it's been pretty much unchanged, up and down, negative 0.48% over this time last week and for the year to date. The worst capital city, actually, which was Hobart at negative 0.86%, which isn't a big dilemma, but the big winner was Darwin at 1.59% increase. There you go. So Darwin topped the rest of the country. The rest of them were pretty modest in their change.
And finally, the vacancy rates.
Sydney's exceptional again at 1.7% vacancy rate. That is incredibly low. Melbourne came in at 2.23%, still an outstanding performance. Perth has continued to climb, much to everybody's disappointment this week. 8.88% vacancy rate, so 4.27% over the average of those 3 capital cities. But something needs to happen in Perth. Either landlords need to start reducing their prices, so there's going to be a lot of hurt still continue in Perth.
Now, with a man that can remember numbers like that, is he worth hiring as an accountant if he doesn't make it in real estate sales?
I don't think we could afford Charles if we wanted to.
We've had this discussion before. I can't be an accountant. I don't use my personality as a contraceptive. How many times do we have to talk about this?
Charles Tarbey from Century 21, Rob Southwell from Pitcher Partners. Thanks for joining us. Thanks for joining us at home. We'll be back next week. Until then, I'm Chris Gray. Good night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.